So let's wrap up this little three-part update with the 5-minute setups, because this is what I'm going back to. A little tail between my legs? Sure. You know, when you play out your trades in such a public forum, whether it be here at the blog, whether it be in webinars or expos or whatever, I'm never going to doubt my analysis, because it's been right for me and allowed me to do what I do for 2 decades, right? My email signature when I sign off on my outgoing emails is often wrong but never in doubt, and that is exactly what my trading is about. I'm often wrong, but I never doubt what I know has been working more often than not. Okay? So what I want to share with you is my 5-minute setups. That's these charts here, this bluish color, this greenish and reddish. And I've outlined this at the blog here before, but I think it merits looking at again because it's been gangbusters. Again, it was fantastic today. And what it begins with, and I just kind of want to more outline what you're doing here, more so than show today's trades, because quite frankly, you guys can go back in time and see exactly what I'm doing, because it's very much a mechanized setup. The only part of it that is subjective is the same part of my trading that is subjective always, which is what is the underlying market cycle of whatever pair, whatever time frame I'm looking at. The first rule of thumb is if I'm going to trade this 5-minute chart, the wave must be heading down in a mark down, or mark up cycle. Again, it must be in an uptrend or a downtrend. The look back on the 5-minute chart is basically a day and a half to 2 days, and I want to take a look at the angle here of the wave. I want to see it either at 12 to 2 or 4 to 6. Again, mark up or mark down cycle. So if I have a trending 5-minute chart, what I will do then is determine if it's an uptrend or a downtrend. The wave, for those of you that don't know, this wave study of mine is the 34 exponential moving average on the high, the low, and the close. There's 3 moving averages. Each one of them is set on 34. They're all exponential. Again, there's one on the high, one on the low, and one on the close. These 2 charts here are my setup charts. They're between the greens, and some of you might have seen my updates at Chartly. I have a 13-period EMA on the close, a 21-period EMA on the close, 34 on the high on the downtrending chart, and a 55 EMA on the close. On the uptrending chart, this green one here, again, is the 13-period EMA on the close, a 21-period EMA on the close, the 34-period EMA on the low, okay, that's for the uptrending chart, and then the 55 EMA on the close. So the only difference between the two is the 34 EMA. On the downtrending setup, it's the EMA is set on the high. On the uptrending setup, the EMA on the 34 is set on the low. That's it. So what I'm doing at this point is I'm just looking for those trends, and you can see there was a nice downtrend in the Euro-US dollar earlier today. And if you go back to about 10 o'clock, what I was basically doing is taking advantage of bounces into my greens, what I call between the greens. I take advantage of these bounces that hit the green lines, and I'm looking to just play the market as it resumes the downward angle. The whole point of playing a trending market, especially on a correction, is the fact that you identify where the correction is still a correction and not a reversal. And at that point you expect exhaustion and then a reversal. That's pretty much what I've been seeing all day. I like playing trending markets, what I call swing trading, on corrections, which means I identify the trend and then I identify the resistance in a downtrend, or I identify the support in an uptrend, and I buy into those levels. So what is a pullback? What is a bounce? And can I execute a trade within the context of the trend? So it's all about corrections, and the entry might feel a little odd because the entry itself is probably a little contrarian, because you're trading into what feels like the opposite direction. You know, you're shorting a little bit of near-term strength, or you're buying a little bit of near-term weakness. But remember, the overall trade is very much trend following. So I had these trades that were triggering all over the dollar correlated majors, the COMDOLs, a lot of intraday trends today with the kind of movement we've seen out of the Dow and the dollar. And what I did is just play the appropriate time frame, wait for the bounce, and go ahead and just either buy into it or short into it. And on the 5-minute time frame, except for around 8:30 when we had the economic release, and I usually like to kind of stay away from the 5-minute because it has such a small risk-reward ratio. You really can't take a lot of volatility in terms of that momentary craziness that you might see at the releases. Other than that, this has been great. Again, identify the trend on a 5-minute chart. I do that using my wave, and then I utilize these Fibonacci-based moving averages to identify the corrections, and that way I can buy into uptrends and short into downtrends on those corrections. So I believe I have a link for that, and I'll go ahead and include it with the text of this particular video so you can read up the actual details of my 5-minute trading, which is exactly what I'm going back to after last week's crash and burn. So thanks for joining me.